Today's topic, should I be in business? Hi, I'm Jeff Banks, the founder of Banks Consultancy, not your ordinary accountants, and these are our tidbits of today. And today's topic is, should I be in business? I wonder from time to time as clients come through my office complaining about making ends meet or dreaming of having their own business, whether or not many people who are in business should actually be in business. Employees tend to look at the boss with what I call rose-coloured glasses syndrome and the glamour of being in business. But we as small business owners know there is much more to being in business than just the glitz and the mystique of business. Let's look at some of the bigger myths of business. 1, I'll make more money. Well, if I suggest that to many small business owners, most of them live below the basic wage level in real terms. 2, turnover does not equal profit. And 3, sales does not always equal cash flow. At the end of the day, the investment should create a return over the input over time. Number 2, I can have holidays whenever I want. Ask any small business owner and they will tell you real holidays where you go away and think of nothing but relaxation never occur. Because if you're not at work, you don't get paid. Number 3, if I'm in business, I can claim more deductions. Usually, that's because it costs money to run businesses. Number 4, I can structure myself to pay less tax. And in many cases, paying less tax means I'm actually making less money. And number 5, I'm able to split income between family members. Most small businesses incorporate family members in some way, shape or form in almost volunteer roles. At the end of the day, they should be compensated for their input. The one biggest failure for the novice small business owner, other than insufficient planning, is what is called capitalisation. Making sure that there are sufficient funds behind you to make your dreams a reality. The first thing the budding small business owner needs to tackle is the concept of cash flow. As every small business owner becomes very aware of very quickly, is that even though I've done the work, I've produced the widget, I've purchased the widget, I've put it into stock, I've invoiced it, none of that means that that'll immediately turn into cash in the bank. One of the biggest killers of business at any time is credit. And in the meantime, you've had to pay the wages of the staff because they don't tend to work if they don't get paid. You needed to house the stock and landlords will kick you out if you don't pay the rent. You've made phone calls and phones will get cut off if you don't pay the bill. And you've got to run your car. Not to mention, you've got to feed yourself and your family because starving is not a pretty sight. Another consideration is the time it will take your concept, product or consultancy to take off and at least reach a capacity where break-even is achieved. In a cubicle, just having received your pay and thinking, geez, I can do this better than the boss and get your fair share of the pot of gold, perhaps you could, perhaps you have the ability, perhaps you have the funding and the nerve to go on regardless of the cash flow. But those thinking of throwing the regular, secure, weekly wage in favour of a small business and the life that entails needs to become very prepared for what lies ahead. If you do nothing else, take your plan to an advisor, an accountant, a business coach or a financial planner and have them have a look at your plans. And I would suggest that if the plan is only in your head, you're definitely not ready for business. Here are a couple of simple matters that you should think about when you're thinking about your business. What are you really worth? You know, the salary that you would expect for a 40-hour week and don't expect to be doing a 40-hour week. How much cash am I going to need for the initial setup and then the lag between sale one and deposit one and then on until cash flow means I can stop using my own funds to prop up the business. Number 3, what return should I be seeking on an investment with the risk of small business, given that I can get 4 or 5% in a bank or perhaps 11 or 12% in the stock market with very little risk. You know, then you take the first figure and double it because you're going to be working 80 hours a week. Multiply the second by a third, suggesting that you want a 33% return to justify the investment in such a risky venture, and that is how the cash flow you need to generate as opposed to the profit, just to keep me in the manner I am presently attuned as earning a wage, not to mention the compensation for the increases in the stress levels. A wise advisor once said to me, once you have done that calculation, double it, and that will take most of the rose colour out of the calculation and bring the budget back to what is achievable. It might sound a bit conservative, but in reality, why do businesses fail? Because expectations are not met. I hear potential entrepreneurs saying, you're setting the bar too high, or it will take time to get there, or worse still, I can live on the smell of an oily rag while my business builds up. These are very, very dangerous comments, and invariably are the first signs of disaster onset. Remember, today you're in a comfortable cubicle earning a wage that comes every week, regardless of your employer's cash flow. All the planning in the world means nothing if you don't have the financial backing, let alone the strength of character, to make it all happen. That's me having my bitch for the day. It's Jeff Banks, Banks Consultancy, not your ordinary accountant.